Hello YouTube, welcome to Trade Journal episode 13. So let's go ahead and take a look at my portfolio right now. It's sitting at negative 15.95%, so essentially 16%. I'm down to $242. Um, this just looks like this because price was acting really weird on the contracts. Volatility came up on Meta yesterday right before close for whatever reason, so it closed and it looked like I was up a pretty good amount. I knew I wasn't going to be, so even though it looks like I'm down today $242. It was essentially the same price that I was before the close. Yeah, before like a few minutes before the close on November 1st. Um, about $100 instead of yeah, it's about $100. So I'm actually down like $100. It's not really down $242. Um, but that's just how it looks because of the volatility here on Meta. If we just go ahead and take a look. We just go ahead and zoom down all the way down onto the volatility, IV rank, and percentile over here. Whoop, I might have zoomed in a little too much. So if we just go ahead and zoom in, there you go. You can see volatility didn't decide to just come up a little bit for who knows what reason. So that's why the contracts. That was yeah. It isn't. It's hard to see it, but yeah, you get the gist of it. But so yeah, I'm not liking the trade. I added in double down, averaging down. I'm trying to do like a martingale strategy. I don't like it at all. It's not working out. I was trying to like add in uh, on the third MACD crossover signal, like buying upwards and using like a 1600 moving average, which would essentially be the 200 moving average for the 4-hour chart. But man, this is not looking pretty. I don't like how this chart looks whatsoever. So if the price comes back up, awesome. I'll take profits at the 618 level. If price goes down, I'm just gonna cut losses at the 556.09, and then just kind of let Meta do its own thing for a little while. Because honestly, my account value is a little low, and Meta contracts are a little expensive. Even though the ATR is really high, it's higher than Tesla. So like the return per trade, if done correctly, is a lot. I'm still not gonna do it because I'm not used to trading it just yet, and I just don't have the capital. The risk to reward is just not in my favor. A lot better at trading SPY. So we're gonna go ahead and go over the SPY trades I had for today. It was beautiful trades, beautiful trades. So we go ahead and zoom in. We'll do the 55 tick, the 1 minute, and the 5 minute. Okay. So my entries, my initial entry was around here. Okay, because price had came down about 20 DT, one contract or one striking price in the money. So I had ended up doing a fib level like this. Okay, let's go ahead and just zoom in. So fib level like this, I bought in somewhere around this range, and then I saw that price came up. So that means that I didn't hold the golden pocket zone. So I was like, oh man, that's not good. So I'm just gonna close the contracts, right? Wrong. Okay, ooh, the bug just landed, man. So So I ended up just taking a step back real quick and saying, okay, let's take a look at this chart again. Does this still look bullish? Does it still look bearish? Or does this still look bearish, or is it starting to look bullish? And I was looking at the 5 minute chart here, and I was like noticing a few things. I was noticing, okay, so it's holding below the previous day low, or I was holding below the previous day close and the previous day open. Like this is looking like it's gonna go somewhere. All right, and I was thinking like this really does look like it's gonna go down. Okay, at this point, so this is what I was seeing. So just go ahead and move over. All right, we were like right here somewhere when I had closed the contracts. And I said this looks still bearish. Okay, I'm looking at the MACD here. MACD looks like it's starting to want to slip. The RSI was like under the 50 level, or exactly at the 50 level. So I'm like, this does look like it wants to slip. But mainly, I was like really keeping my eye on the fact that it was holding below PDO and PDC. I'm just gonna use those now. Okay, and then price came down, and I'm like, I'm gonna jump in this. Yeah, I'm gonna jump in this, and I jumped in. Okay, and we can go ahead and pull those up real quick. So I jumped in. I wish I had timestamped this, but for whatever reason I didn't timestamp my entries. I time stamped my exit points, but my entries are not time stamped. But somewhere around this level, okay, is when I decided to jump in. Okay, so I'm just gonna read over what I had typed out in BuellerBuys Discord channel. So two SPY puts. Okay, it was in the money slash at the money because it was the 571s that I had bought. And this was my reasoning. So price has, and I'm just going to essentially might just repeat what I had already said, but price has rejected off the previous day close, 571.02 multiple times. So you can see there, 1, 2, 3, 4, maybe 5. And then stop loss was the higher alert, take profit 1 was the middle alert, and take profit 2 was at the lower price alert. I didn't like how the volume looks, so if you take a look at the volume, you can see there's higher volume on buyer candles or bullish candles than on the sell candles. But I didn't notice that before I had entered the trade. But I still felt confident in price holding below PDC, and I was already in the trade, so I decided I'm going to stick to the plan until the price hit my targets. So added confidence, price is now slipping down, holding below previous day low. So if you had looked at the previous chart to this chart, you can see price is now starting to slip. I did sell one contract into strength, and I was still holding the second. So that was perfectly timed, as you can see here. So that blue arrow right there pointing up, that was my exit point on the first contract. And yeah, perfectly timed. As you can see, price came back up. My stop loss was lowered to as well, and I just didn't type that out, but I lowered it to 570.88, and then I moved it down again to 570.61. I really did not want to give my gains back on that second contract. And then price ended up hitting my second alert, so I ended up moving my my stop loss down again instead of just taking profit on that second contract. Even though that second contract was up over 100%, I decided, you know what, I really have a high risk to reward ratio like in my favor. Since my profit would have been down at the 569 and my stop loss is at the 570.42, so that's definitely well over 1.5 reward to 1 risk ratio, excuse me. So I decided to hold that. Price came back up. My alert got hit, so I was out of both contracts here, but price was still looking good for bear side, for the bears. Sorry. So I decided though at this point it was like 41 minutes before market close. So for PST it was like 12:19. So said I will not buy 0 DTE. I do need to fix that edit in BuellerBuys Discord channel. But I did decide to look at the 571's DTE. Okay, so that would still be in the money, but I would have way more time on the trade. It's just the only problem was premium was higher, but I had buying power still, so I had no issue with that. So right here, I was back in one contract at the latest blue arrow. So right here in this area, you can see. And I had set another stop loss level at 570.72, so 4 cents above the high. Now, what I didn't notice was that I actually did miss a better entry. I should have entered the moment price had bounced and closed below the previous day low. I didn't though, so I ended up just buying here, and then I decided, okay, I will add another contract if price comes back up to 570.6. So right around here. So if price just came back up here, I would have and then one red candle and a close, then I would have bought in, and I would have had 2 contracts. But that wasn't the case. So price continued down, and I took partial profit actually. I did not take full profit. So what I did is I rolled down. So I still had that 1 DTE. So from here to here, I took profits and then I rolled down 2 striking prices, and then price ended up coming all the way back down. So that's where I rolled down. Price came back down. And I actually took profit there on that final blue arrow that you see. So price hadn't hit my bottom alert yet. I took the profit anyways. I think it's a good idea to sell to strength using the staircase method. And then if we just take a look at the charts over here, you can see price did end up actually hitting my alert down below the 569.35, I think was my alert. Ended up just taking profits there, and price ended up coming back down. But that's okay. It was nice because after that there was some chop up here, and then I could have re-entered, but honestly my brain was kind of fried. I did use a lot of mental energy for this trade, but it was perfect. I was in the flow. I was in the zone. Yeah, I was trading in the zone. I haven't traded this well. I just need to make sure that I trade like this again consistently going forward. And these are the profits you can see. I believe, yeah. So I bought two. It's not showing the amount of the contracts, but I bought two. Uh, two for a debit of 104, and then I sold one for a credit of 83. Sold the second contract for a credit of 77, and then I bought in again for a debit of 219, and then I took profits for a credit of 243, but I rolled it down to the 569. So you can see here for a credit of 154, and then I took final profits at 176 credit. So that's it for today. Again, if it wasn't for these damn meta contracts, I'd be in a much better position here. Yeah, but again, I'm still super happy with it as long as I continue trading the way I did today. I do see light at the end of the tunnel. So thanks for watching Trade Journal episode 13. I'll catch you guys in the next one. Peace.